All right, in this video, let's talk about how to buy a franchise with no money. Now, having owned multiple franchises myself and having worked with and coached hundreds of franchise buyers, securing the funding you need is probably one of the most important decisions that you can make in your process of buying a franchise. And generally, I think a lot of these buy a business with no money down is a bit of a pipe dream. But today, I'm going to go over with you what I believe are some actionable and legitimate strategies that you can use to buy a business or franchise if you don't have any money. So, most of the videos that you see in regards to buying something with no money down is related to an existing business, and it's trying to convince the seller of the business to seller finance the entire deal. And so this video is different. We're going to talk about stuff that you've probably never heard before, because up until just a few years ago, I'd never heard it myself. So let's dive in. All right, so let's dive into the 4 specific ways that you can buy a franchise with no money. And so the way that I actually learned this over the last 3 years after I bought my franchises. Would have been helpful to know beforehand. So let's rewind back to 2008. I was 20 years old and I had got my first job at the bank. And so I was working as a personal banker. I had my investment licenses at the time. I really, really wanted to be an entrepreneur. At this point, I had started a landscaping business about a year or two before, and I'd started making money with it. But honestly, I just got in my own way. I was just analysis paralysis with some stuff, getting overwhelmed, confused, just getting caught up in things that it probably shouldn't have held me back. But I had some cool experiences there. I actually had landed a commercial job that had, I made like $4,000 in that commercial job, and I got a bunch of my buddies, paid them under the table for $10 an hour. Granted, I was fresh out of high school at this point. So, 15 years ago or so, almost 20 years ago, $10 an hour was a lot of money back then. But what happened was, as I'm starting to work for the bank and trying to figure out how am I going to achieve my dream being an entrepreneur, I started looking around online at franchises. And I thought, oh, wow, that would be really cool. Yeah, if I can own one of these bad boys and just follow a template or kind of business model, I feel like I could be successful at that. But they all had these big financial requirements. And I'm seeing they're requiring $100,000 liquid, meaning cash available, or just money that can be converted to cash, $250,000, $300,000 net worth requirements. Now, mind you, just turned 20 years old. I'm still living with my parents, and I had about $1,500 to my name. So I didn't have the money, and I gave up. And fast forward 7 years later, I was still then in the corporate world, having climbed the corporate ladder in financial services, getting married with my wife, and finally had enough money, net worth, assets to be able to pull a home equity line of credit and buy our first franchise. But if I knew then what I knew now, what I'm about to share in this video, I could have done it much faster. So if you're into this kind of thing, if you're into business, learning about how to be successful as an entrepreneur, not just franchises, then I invite you to subscribe, hang around. We've got a lot of good stuff for you. The first way that you can buy a franchise with no money is for you to secure a partnership, right? So one of the things that I did not think about or realize as a 20-year-old kid was that I was willing to work 50, 60, however many hours a week it took in a business as an entrepreneur. I had no commitments. I had no kids. I wasn't married. All I wanted to do was work and be successful. I was willing to do whatever it takes. And right now, there are individuals that they have the money, they have the capital, but they don't actually want to be the ones operating the business. And so in that situation, you can just be the operating partner, and then you find a partner who can be the financial partner. And so in the franchise space, you see this often actually with parents and their kids. I've seen a lot of father-son combos in business. I've seen this with multiple businesses. I've seen it with some college hunks hauling junk franchises. I've seen it with some other home service-based franchises where the father puts up the capital, signs a franchise agreement with the son, could be the daughter as well. I'm just speaking from experience here, right? We don't need any woke people coming in and attacking me. And basically the son runs and operates the business. So that's something that you could do. It doesn't even just have to be a family member. It doesn't have to be a parent, so to say. But right now there are individuals, as I would be a perfect example of this. Like right now, I'm married, I have 2 kids. I have a successful business. I have the YouTube channels. I'm busy. I personally don't want to or have the time or bandwidth to be in the day-to-day operating a business. If there was someone that I trusted and they had some skin in the game and I felt confident that they could operate a business, like I would be very open to going into business with someone. The caveat is like you have to have a track record or be the type of person that has the character, right? For someone to be willing to trust you, for them to put up $100,000, $200,000, $300,000 to get a business up and running where you run it. So that's the first ways you can do a partnership. Number 2 is you can raise money, right? So you can raise money through family, friends, investors, where instead of this being an actual partner in the business who's signing a franchise agreement with you, because they're taking a level of risk when it's a partnership, right? They're typically signing the franchise agreement with you, personally guaranteeing, etc. But this is purely where you could raise money and pool together those funds, and then someone's essentially lending you that money, and then now you have the assets that you need to start up the business. Now, some people might go,
well, it's not that easy to raise money.
Well, look, if it was easy, everyone would do it. The goal of this is not to be easy, right? And if you're looking for easy, then you should not be an entrepreneur, because nothing about business is easy. So there's a phrase, I used to travel the country speaking for Tony Robbins. And, one of the things that Tony would say is it's not about your resources, it's about your resourcefulness. And quite frankly, if you look back to a lot of stories of big businesses these days, they were started by individuals that got money from friends and family. And for me, quite honestly, it's really not something that I probably would have felt that comfortable with, or even now feel that comfortable with, because I just know the level of risk. It takes a tremendous amount of confidence and some cojones, right? To take money from family and friends to go out and start a business. You got to be incredibly confident that you're going to be able to be successful. And to me, it's a tremendous amount of pressure. I'm willing to handle some pressure, but with family and friends money, I personally, probably not something that I would want to do, but a lot of people have done it successfully. And so this shifts to number 3, which is a way that you can get money from family, friends, investors, etc., which is through what's called a self-directed IRA. So this is not your traditional kind of IRA we're talking about here, right? What happens with the self-directed IRA is let's play out this scenario. So let's say I have money in an IRA. Let's say that I have $500,000 in an IRA that I've been saving and investing my money into. And you come to me and you say, hey, Tariq, I'm looking to start up this business and I need some capital. Are you interested in partnering or investing, where either I can give you some equity in the business or you just lend me the money and I'll pay you an interest rate, like you being the bank. And let's say we know each other and I think that you've got the credibility, and I say, okay, I feel comfortable providing you the capital for you to start this business. Well, I can put my money in what's called a self-directed IRA that then allows like check writing capabilities in that self-directed IRA, where then I can literally write you a check out of my IRA for the money you need. And technically the money has not left my IRA. The money is still within the tax protections of the IRA. And so there's a couple of ways to structure this. It can be an equity deal, right? Where you're giving me equity in your business and saying, okay, you own 20%, 30% of the business, and I'm going to pay you X distribution. So 20, 30% of the profits each year. A lot of different ways that you can structure it. So one's the equity side of it. The second way is that you can structure it as a promissory note, which is just a fancy word for a loan, right? Which is similar to, let's say you just structured it the same way an SBA loan would be structured, which is I say, okay, I will lend you the money for 10 years. And right now, SBA loan rates, you're probably going to pay 11.5% for an SBA loan, but I'll lend you the money at 9%. And for me, the benefit that I get as the person with the money in the IRA is, let's say I'm saying, oh, the stock market's at all-time highs. I don't really want to put my money in the stock market. If I just put it in like a cash equivalent in my IRA, then I'm only going to get about 5% on that money. And so because I believe in you and I think you're going to be successful in this business, it's a win-win. You're not having to pay 11.5% and go through the rigmarole of an SBA loan and all the red tape, and you get the loan at 9%. So you're paying less interest rate, and I'm getting 9% by believing in you and investing in your business, and it's a win-win. But again, this is still operating under the structure of my IRA. So as you're making those payments back to me, that money's going back into my IRA, those payments. Not many people know about this. It's really cool. And actually, I'm getting ready to speak at a conference in February for an alternative investment conference where the company putting on the conference is a trust company where they specialize in this thing. They are the custodian for self-directed IRA accounts, which is pretty cool. The last way, number 4, the fourth way to buy a franchise with no money down is to buy an existing franchise, a resale franchise, one that has been already running and operating. And if you followed my content before, I talk a lot about resale franchises and just the overall opportunity. It could be a great way to step into a business, already doing well. So the cool part about this, most people, when they finance a business, and especially franchises, they're usually using an SBA loan. Now, I've done a bunch of videos on all the detailed ways that you could fund a franchise and break down all those different methods. So if you want to see that video and all the different funding methods, then drop a comment below, and we'll make sure to comment with a link for a video like that, so you know all the different funding methods that you can use. But SBA is one of the most common ones. And so what happens is when you're buying a new franchise, typically if you're going to finance with SBA, what happens is the SBA lender, they typically require you to make a 20% equity injection in the business. Basically just fancy words for down payment. If the business is going to cost $100,000 to get up and running, then the SBA lender is going to want you to put $20,000 of your own money into that, and then they're going to provide you a loan for the remaining $80,000. Now, what's cool is that when you're buying a resale franchise, assuming the business is profitable and can support debt payments, meaning it can show that it can still cash flow even after making the loan payments, then you can get away with only putting 10% down on buying that business. Here's where it gets really interesting, and where it's buying a business with no money down, is that you can negotiate 10% seller financing with the seller, and then get the other 90% from the SBA lender. And so what happens is you get the 10% from the seller financing, you get the 90% from the SBA loan, and boom, you've now bought a business with no money down. So mission accomplished, super cool. If you like this video, give it a thumbs up, subscribe, and hope you got value out of this. Let me know what way you're thinking of going when it comes to buying a business with no money down. I look forward to seeing you on the next one.